So how do the tax savings work? The tax savings is a whole animal in itself. Number one, I am not a CPA. I don't even know if I have the power to even deal with that. I'm not a tax attorney. I know, surprising, right? So absolutely talk with a professional. I can tell you what I know about it, my understanding about it, and you do with that what you will. The real magic that makes multifamily investments really, really pop and work for high earning tech salespeople or anybody that's making good money that wants to invest in real estate and save on taxes is really getting what's called real estate professional status with the IRS. What that basically means is either you or your spouse is a full-time real estate professional, realtor, broker, whatever. The requirement, I believe, is about 750 hours. You need to be able to document that you spend 750 hours materially working in real estate business somehow. When you're able to do that, this is where the magic happens. You're able to write off, take your passive investment losses, which happen in real estate. So when you invest in a deal, we depreciate the investment, right? It could be a big write-off. So you get a big write-off back. Well, with having that real estate professional tax status with the IRS, you're able to take that write-off from your passive investment and apply it to your active income from your sales work or your W-2 job. So for example, if you put in 100 grand into a real estate deal as an investment, let's say we do a cost segregation study, we're able to write off 75% of that, so 75K is a passive loss for you, and you make $500,000 in your W-2 job, right? You're at probably the highest tax bracket. I don't know what the number is, maybe 37%. Let's assume that $75,000 from that 500K brings you to 425. And let's assume that's a new tax bracket. Maybe you're now at 35% or 32. I don't know what the numbers are. But you're now taxed at a lower rate. And that's really only possible, again, according to my understanding of how this works, with having real estate professional tax status with the IRS. And by getting that status, that's where you're able to do that magic thing. Like personally speaking, I was able to write off, I did a 230K investment into one of my deals, and I wrote off $266,000 on my taxes last year because of that, right? So we were able to write off basically 114% of our investment from my active income, from my passive income, from my active income, if that makes sense. So I lowered my tax bracket that I'm at and I'm paying taxes. Plus, generally speaking, the profits that you make, the returns that you make on your passive investment are going to be taxed at a max rate of 20% capital gains. And that really is dependent on your adjusted gross income tax on your, where you're at, right? If you're filing single or married or whatever, and if you're at the highest bracket of 37%, you might be paying 20% capital gains. If you can get to a lower bracket, you might be paying 15% capital gains. So those are two really, 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 really powerful ways that you can lower your tax liabilities. And that's why investing in real estate is wonderful, because the taxes you do pay are taxed at a much more favorable rate than ordinary income or active income that you make in your W-2 income. So again, speak with a tax attorney or your CPA and get some more information on that, because it really is a game changer if you're able to take advantage of that real estate professional status. It's good stuff.